Okay, so we were here. We wanted to see, we were waiting for this buy. Now, what is important is we are just building liquidity so that we sell. This market is going to sell. You have got it. This price here, it's going to sell, but this buy is just to build momentum for the sell. So what is important is we are waiting for the sell to happen. But here, you see all this is liquidity for us to sell. But the buy, it is just a retracement. Then we shall have a sell. So next week, it's where someone will have a clear setup. But this week, we are just going to have a small buy, then we sell. The same with the other pair of dollar. The GBP USD, we are having the sell. Euro USD is the same thing. So look at USD card. If you look at USD card, you're going to see something. USD card, they move the same direction with the dollar. So this is my USD card. I go to yearly. This is USD card. This is the yearly USD card. Now, this USD card price reacted off this fair value gap here. And when you look at it, it is failing to break through. So it reacted from this FVG in 2016, in 2020, then also 2025 last year. Now, price came and swept this previous yearly candle. This was our smart money reversal. So where is price coming from? It is coming from this high. This is the origin of the move. This is the sweep of liquidity. So we are targeting where? This range low. This is our range that we are trading inside. So we know where price is coming from. Price is coming from this fair value gap with a sweep of liquidity inside it. So I come to monthly like this. So if you come to monthly, already we know our range that we are trading in. When you come to monthly, I know the range that we are trading in. We are trading from this range high to this range low. So currently, price is in premium. It shows we are looking for a sell opportunity to come downwards. So when we are looking for a sell opportunity to come downwards, what do we need to know? Where is price coming from? It is coming from this high, a sweep of liquidity, sell program. Then the next move, there was a church which has happened already. So price is reacting off this fair value gap here. price is coming off this fair value gap. So this fair value gap here created what we call a sweep of liquidity. It created what we call a sweep of liquidity with a sell program activation. So here we are having a raid here. We are having a raid. This is the raid here. Then we're having a sell program activation. A sell program activation, which is this here. Now, where is price going to react from? We need to know our key level. So when you look at this, you see this one, this was an order block. But if you look at it like an order block, price came, this is the low here. It swept and did not close below it. Sure, it shows this one is still a strong order block because price failed to go through it. But now, where is price coming to? It is coming to this breaker block here to react from. So we are just buying to reach this zone here, then we sell. So it shows this month we are still going to sell this USD card. So price is just reacting. This is a retracement, a manipulation, then we sell. So we want to see the side of the curve that we are in. Now, this is the entire thing. This is our range low here in weekly. Then price is now trading back inside where? It is coming to this fair value gap here. You see this? This is where price is coming to, this FVG in weekly. So we are just selling, then we buy. Sorry, we are just buying, then we sell. So this is the market maker sell model. We are in the sell side of the curve. So we are just waiting for price to come. This is the market maker sell model, like this. We are just waiting for price to come, and we have expected distribution, which is a low risk sell, which will happen when price reaches here. Then we shall sell coming down. This is what we are expecting. So it shows the news will push price here. Then next week, probably Tuesday, Wednesday, we shall sell and come down. So this is what we are waiting. This is manipulation. First week of January. Second week, we do a small distribution. Third week, then we complete the distribution. So this is what I'm anticipating price to do. We want price to come and react from this fair value gap here on weekly. So when it touches this fair value gap, we are waiting for a sweep to happen from here. Then we distribute coming down. But currently, we are just buying. So price reacted off this inverse fair value gap here when you look at it at the beginning of this week. This pair, if you look at it, price came and tapped. That's why we are having a buy from that zone. So when I come to daily, you even see it. So price is reacting off this inverse fair value gap. You see this one on daily, which happened today. Price came back here. We wanted to see a sweep. When I go to hour one, I want to see if there's any setup for a buy. So this is my hour one like this. You're getting it? So inside my hour one, if I look like this, we're having a mitigation block. You see this? This is a mitigation block in hour one. So price came and tapped it. When it tapped it, what is happening? We wanted to see if there's any sweep of liquidity so that we buy. So price came, tapped this mitigation block, it swept this low. So price came inside this mitigation block, then swept this low, then created a breaker block, which is our entry. That is going to happen anytime. You see this? This is a breaker block or a mitigation block here. So we are having everything. We are having a red here. You can mark that one as a red, or you mark this one here, like that. So there's a red, there's a church, then we are buying. If you don't see it very well in our one, you go to M30. Now M30, you can see it very well. You're getting it. This is the same thing, I keep sharing it. So one, where is the red? Let me adjust this one a bit. For us to buy, we want to see a red. So this is the red, a sweep of liquidity. Inside, a mitigation block. This is a mitigation block we marked in R1, this one here. So we are having a mitigation block, which is this one. So price swept inside the mitigation block. So that is a strong key level. Then where is our activation program for buy? This one here. This is a two source of or a Judas swing. So where is our change in character? You see this? We can mark even this one as a church, or we mark this one here as a change in character. So we are having a church here. So price came back inside this mitigation block, this one here. It is now reacting, and that is where our entry is supposed to happen. So our entry would be from here, stop loss. We just adjust it a bit here. Then we target. Let me see where we are heading to. I will just target this high here. This high would be my target. Wait, let me first see in H4. Okay, my target would be here. So you make your entry from there. Then we target up there. Now, price is supposed to touch this. This is a fair value gap here. This is where price is supposed to reach. That zone here is where we want to reach. You're getting it. But you may just take your profit somewhere. This high here, this one, the first take profit, then you make somewhere here, the second take profit, but we have to reach that zone. So price is just moving to that zone there. Then we call it a trade. So this is what I'm anticipating, and this is what I expect price to happen. So we are just buying to reach that zone, then we call it a day. So let me post that one in the group. So this is a setup for us to buy. It's the same thing as it is happening. You make your stop loss, that's not very big. It is small because we know our invalidation zone. Invalidation zone means when price goes against, we shall not continue making an entry. So these are 22 pips. So if it goes beyond, it is still okay because you're willing to lose little and gain a lot of money. You're getting it. This is over 41 pips. So it is not bad. It is a good setup. So this is what we are seeing. The same thing, that's why I even shared this pair of USD chef. This one here. It was this buy. I think I shared this buy. You're getting it. I used the same thing. This is the buy I shared. I think I shared during the day. So this is the first one, then came back, then it's now pushing the same thing, the same idea. See, the stop loss is just below. It's just the same thing. But this pair is going to sell, but the sell, we shall confirm it later. But now the price is just buying. So that's why I share this buy setup during the course of the day. And she's just playing there. But the best trade probably will happen next week. This week you buy by those short moves. You don't overstay in the market. So this is what we are having. Then tomorrow we are having chef news. Chef news will happen tomorrow. So we shall look at Audi chef and NZD chef. This one, Audi chef. So we do the same thing. Higher time frame key level. I think this You recall this buy, I shared it, I think the other week. Was it this week? This buy. I shared this buy. Was it this week? I don't recall it. So this was the buy. It happened well, you see, both very well. So I'm going to look for the setup which will happen for the news. Now let me go to higher time frame key level and see. Now you see this? Now these are the pairs. That's why I like, you see this, it has been just selling throughout. You see, that's coming down from 2009, 2014, 2017, 2021, 2022, 2023, 2024, 2025. We are just selling this one out the chair. So that's why I always like them. Now, what do you want to see happening here? This is the yearly chart for 1 year, 12 months. So we want price to come. You see this? This is fair value gap here. So I want to see price reacting off half of that FVG, which is here. So I want to see price touching there. Then give me a reaction so that I look for a sell. So I want to see how it is happening. So when I mark that, because that is the FVG middle shred hole, like the middle of the FVG. So I don't know where price is coming from, but I don't know, I have where price is going. So I want price to come to this low of last year. This is the low of last year. So I want, this is our take profit one. So when you're trading this pair, just know your take profit is here for this year. After that, it will create another take profit. So I'll come to monthly. Now this is monthly. Now this is where I develop a range. This is monthly. Now when I come to monthly like this, I look for a range that I'll be trading. I may mark this one, this range high. Then I consider this one as a range low here. So currently, if I mark this gun box, price is trading from this low, coming to this fair value gap here I've marked. So price even came and swept this. It swept this liquidity. But where is price reacting from? It is reacting from the shred hole or half of this wick. So half of the wick is between 50 and 60, which is here. And this is where price is reacting from, this long wick. So it is reacting from this wick here. That's where we're having a sweep. You're getting it. This is where price is coming from. It swept here. So we are coming to this fair value gap. This is where our target. We shall be above 0.5. So we are looking for a buy to come in. Then later we shall sell. So I come to weekly and see. Now this is my weekly. So this is the range. This is the fair value gap. So one price to trade to come there. So when you come here, that's why we are having, this was a clear setup by now. You see this? This is the mitigation block here. Price came, tapped, reacted, then pushed. Even this week, it pushed. So I need to get a clear market makers buy model. So I'm here. Because we want to target here. So it tapped Monday, Tuesday, buying. So tomorrow we are having Chef News. So price is reacting off this mitigation block here. This is a simple one. So tomorrow at 10, I want to see price sweeping this low. Then I get a buy opportunity and I go up. Very simple. So tomorrow we are having Chef News. So I'm having a mitigation block here. If where price is reacting from, then I look for a buy opportunity. So tomorrow, I want to see price coming, sweeping this low, then giving me a buy. You see even here, there's already this mitigation here if I'm marking it clear. which is within this law, the short-term law. I want price to sweep. I want this price to trade here. Then we buy. This is what I want to see tomorrow. So I'll wait for this pair for it to happen, because there's no any opportunity of buying now. There's nothing. But we just want it to come here, then we buy. So tomorrow, during this time, I just want to see what will happen. Then I look for a setup. Right now, we just have to wait. This is a clean market maker buy model. You're getting it. This was a very clean one. How? How do you say a clean one? We adding a buy program activation. You see this law? Swept it inside the mitigation block. Here, it swept inside that bigger mitigation block at map. Then where do we have a church? You see this? This was a change in character here. This was a change in character. Then where was our door to liquidity? It was this high. You're getting it. Then it reached it there. So price started just buying. We were just looking for any mitigation block here to use it as entry. There was a mitigation block. Then you come. This one is a mitigation block. You see, price tapped it. Then you come. This is inverse fair value gap, like this. You're getting it, price tapped, then go. The moment, as long as you wait for a buy program activation to happen here, a raid, buy program, a short, then you just enter from this inverse fair value gap. You wait for price to first go through it, come back, then you buy. Like here, it went through it, wait for it to come back, then we buy. The moment you see this one happening, then now you just do this. The market becomes very easy and direct for someone to trade. So this one, we are just waiting for come, then we continue with the buy. So this one moves with NZD. It moves with NZD chef. So this is NZD chef. It's still having. We want to see how it is moving. This one, I think I shared this one also someday, the setup. I don't know when I shared it. So we want to see how it is moving. So I remove it. I start with yearly. Remember, the whole trend is still selling. So this is our yearly. When you look at yearly, price should first manipulate up, then down, like how last year. First manipulated by buying, then dropped. Here, it is manipulating by buying, then it will drop. So here, there's no range. There's no key level. I come to monthly. When I come to monthly like this, I'm seeing price is coming from this one. Price is coming from this strip of liquidity here, but it is reacting off this fair value gap here. So it shows this is our door to liquidity. There's no clear range. Let me go to weekly. So when I come to weekly, now this is where I get a range in weekly. You see this low? That is our range low. Then this is our range high. So we are having a range that we are going to trade in, if you look at it. So one, this is premium and this is discount. Yeah. So when I have this, price is coming from discount to premium. We are targeting this order block or this fair value gap. So it shows I'm looking for any buy opportunity. Price came. Where is our activation? Sell here. You see this? A raid of liquidity. Very good one. This is raid. What has happened? This is raid of liquidity. Yeah. Then where is the buy program? This is the buy program activation. Yeah. Then now, where is the church? This is now having everything. You see this? This is changing character. In weekly, this is a bloody one. This is a good setup. So price came and created a church. You see? This is changing character. So where are we entering from? Fair value gap mitigation block, which is this one, inverse fair value gap here. You see? So what do we need to see? A sweep of liquidity. You see, price came and swept a previous weekly low here. So what do we need to see this week? We are going to buy because tomorrow there's news for chef. So tomorrow you're going to buy this pair. You're getting it. When you wake up at 10, you see, when you check here, see here, this Forex calendar, this one. Are you seeing it? This one. Tomorrow, Thursday at 10:30 a.m. there's CPI for chef. So we are going to look for a buy opportunity for this pair. So when I mark this, I look for a market makers buy model with a buy program activation. It is here. Guys, man, tomorrow we are buying this pair. So when you see price came, reacted off this inverse fair value gap, let me first name it. This is inverse fair value gap. Yeah. Then price created a buy program activation. What do we need to see? Is there a red? This one is a red. This is a red. Then is there a buy program? This is a buy program. Then is there a church change in character? This is church. Man, this is one of the best setup I've seen this week. This is church. There. So where is our entry? One, we have even this fair value gap here. You see it? So tomorrow we can even wait and see if price comes and sweeps this low for today. If it sweeps, then we buy. So where is our target? We are targeting this high here. This is your take profit. Then where is another take profit? This one is also your take profit. So we have in this fair value gap here as a take profit and also this high as take profit. So I go to H4 hour one to get a clear market makers buy model. Now this is the thing. I see this. This is the thing everyone wants. Now, this move here. We come to hour one. Now you see this move here. This move you see. We want to see where price is reacting from. When you drag this, let me first come to H4. I want to see something on the left. Now, when you come on your left-hand side, the statement I said, you look for a fail FVG, you use it as entry. You see this one. This was a fair value gap. Price went through, then came back. So this one, where it is church, or I can make my church to be this one. I adjust on it. Then this one, I make it to be inverse fair value gap. This zone here. So price went through, then came back. Now, after coming, what do we need to see? Is there a sweep of liquidity? It swept this low. That low. Now, this is where we have it set up for a buy. So we might wake up tomorrow when the thing has moved. It has forgotten us. So this is the setup for the buy. Now, you will target this high here as your profit, take profit also. Then you will also target this one, fair value gap as your take profit. So I'm going to go to R1 to get the setup. Now, this is my R1, like this. Now, this is where there is a setup. One, where there is a red. Yeah. This is the red of liquidity. Then where is our buy program activation? This is the buy program activation. Then where there is church change in character, you see you can even mark this one here or even this one up if you want. This is our change in character. I call it church. So where is our entry? Our entry is inside this FVG. So we are just going to buy, my friend. So we are going to buy from here. I prefer it in the middle of this fair value gap. Yeah. Then we shall target this high and this high here. Remember, we have in news tomorrow. So we have those key zones that we are targeting to. So where is your stop loss? You just put it somewhere here. Or you wait tomorrow morning. We have two options. You wait tomorrow morning. If it comes and sweeps this low, then gives us another setup. You enter from here, then you buy. So those are the two options. This one is the first. The second one, you wait for it to sweep, then you buy. If it doesn't sweep, you go with it. These are the only option that I have for this pair. So this is what I'm anticipating to happen tomorrow. tomorrow. We having news. We see where price is going. Market makers buy model, continuation buy. Man, this one is a good setup. This one is very good setup. It's good. It's a good setup. So I think I'm going to stop here. I've talked. You can ask me any question. Any question? Hello? Any question, what German? Hello? There's no question, eh?
No question.
Okay. Let me stop
How
here.
do you calculate your
Have a nice evening. Eh?
Thank you.